from 2018 he was working in plus, and right now he's in minus 43. Never use this strategy in your personal trading, especially if you want to be successful and profitable in financial markets. What kind of strategy, why, and with many examples, I will show you in this video, so stay tuned till the end and let's start. So, in today's video I want to talk with you about Martingale trading strategy. You know that I'm a big fan of the algo trading, but in the same time I'm like super hater of the Martingale, and every time I'm repeating to never use it, never use it. So I decided to create one video explanation from the scratch with the example why it's not working and why you should avoid it, because I found that in the minds of the people, Martingale, this is the equal to the algo trading, but it's not like that at all. So let's talk about that. I'll finish my coffee, we'll go to the office, and I will explain you everything with example. So watch this video until the end. One of our services is creating trading bot based on the people request. Let's say you are a trader, you are in the market for some period of time and you have your own strategy and you decide to move from manual trading and shifting to algo trading. So you are sending to us your technical task with the rules, where and why to open position, to close, where to put the stop loss, take profit, and in some period of time we're creating for you bot. And the point is that 90% of those requests, they are based on the Martingale and on the averaging. And when people sending me these messages, every time feeling they are like now writing with some excitement that they found something revolutionary in this market and they will make a lot of money. But you need to know that Martingale, it came to the market of gambling because it came from the gambling in 18th century in France, and even in gambling it didn't perform well. What was the main logic of the Martingale? This is the bet with the doubling after every loss of your position. So I don't know why it's like became so popular in financial markets everywhere. In MQL5 website, people investing in the Martingale kind of strategy, but in the same time they are very, very risky. So let me go to the office. I will explain you how it's working in general, how to find where is the Martingale and why you should avoid this kind of strategy. First problem with the Martingale and with the people that using this kind of strategy in their trading, that this is not a strategy at all. This is not a logic that allowing you to open position to entry the market. So the Martingale, this is the part of the risk management, how you are working with already open position. So with the people that just caring and relying on Martingale, there is no logic behind the opening position. This is the problem number one. Let me show you the classical way of the Martingale that are mostly people are using in gambling, and only few of the people who are using Martingale using this kind of strategy in the trade. So let's say you want to open position, you found some good option where to open, you are opening in this current example, it's buy, you are putting take profit and the stop loss, and let's say with the trading volume 0.1, and when your position closed by the stop loss, so you close this position in minus, you will open next position but with the double volume 0.2. If let's say next position also you closed by stop loss, so you close in minus but in bigger minus, you open with position 0.4, even with the same level take profit and the stop loss. So what's the logic behind? Let's say after 2 losses, when you third trading position you closed in plus, this plus should cover these 2 minuses and take the same plus that you was expecting to receive in your first position. This is classical martingale. In Forex, people using it in a little bit different way. If we will start talking how mostly people in the trading Forex, crypto, it doesn't matter, using martingale strategy, it's a little bit different with the classical one. So let's say here we decide that we want to open buy, we are putting our take profits and we are targeting some plus, let's say $10. And when the price is going down and it's very close to our stop loss or reaching our theoretical stop loss, instead of closing position we will add more. So we will add, let's say we were holding 0.1, we are adding 0.2. When the price is going down, we are adding more, we are multiplying position and adding also 0.4, and when it's going down again we are adding 0.8. What is the logic behind all this multiplying? If let's say price will be here, it will be very difficult to reach this first profit, but by multiplying position and adding more volume, it's allowing us also to move our take profit. So the take profit, it's very close to potential price, and even small correction here, let's say in this current example we had trend going down, but even small correction, it's enough to close position in plus. But the most important question, what will be if the price continue falling down? So let me show you guys how the martingale looks like on the real account, by the way, profitable traders, because for that I want to show you MQL5 websites section with the signals, and I will review almost the top traders, top signals that MQL5 recommending to the subscribers or to the investors that going to this website, but in the same time I'm not recommending to use them at all. So I will go and check the signal. First one, this is the activity, number 1 signal in MQL5 website right now, almost 25 investors, totally 157,000 investing in the signal. Another one, almost 356,000. This is on number 3, and for the example I choose one more signal. He's from top 20, he's number 16, but last month he was in the top 6. And let us check what's the similarities and how to identify where is the martingale on this account. So first of all, if we'll open the main page, if we'll go down to the equity, we can see exactly that there is the difference. You see green line and there is the blue line. So it means he was holding position for some period of time. Remember I was showing you this grid, so it means buy, 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 and then you are stocking in some positions. In the real market it's a little bit different. You can stock for a long period of time, especially if we're going for this calm investor. Let's go for his equity chart and we can see wow, some of the positions here he start holding position in minus almost from August 2023, and he was holding until here it was maybe beginning of 2024. So many months he was holding positions in minus. And number 3, if we'll go to his account, he has the less, but also there is some difference, you see. So the balance was 23,800 and the equity was just 20,000 almost. So he was in minus 4k. Then if we are going to the trading history, in the place of the stop losses there will be no stop losses at all. So mostly these people, they are trading without stop losses. This immediately becoming risky, or this example, so that's why I choose different examples to show you the differences. He is putting stop losses, but if you will compare the price where he opened position, where he put the stop losses, is huge. So this is stop losses just for beauty, maybe, I don't know exactly why they are using them. And number 3, if we will go and check the volume, there will be some changing in the volume. So they are using this multiplier, jumping from one volume to another. Of course, martingale is growing a lot, and they are changing the styles of the martingale, and they are changing like involving and improving different criteria to make this system more stable, because before it was just short periods trading strategy they are working. And why I'm showing you exactly them, because all of them are profitable. Let's say this guy from 2021, he's trading in plus. This guy, he's trading in the plus, closing every year in the plus from 2019. And this guy, that number one in the rating, he's trading in plus from 2021. But even with the plus, I'm not recommending them. So number 3 point, as I told you, see in the volume they are jumping. Like this guy, he start trading from 001. Let me show you some of the volumes. You see like 001, 002, 004. He's using a little bit different multiplier than 2, but it's common for this type of the bots. But you see sometimes volume almost one lot. So can you imagine how much it's risky becoming even for his account with the balance of $9,000? Let's say for this guy, he is multiplying, but multiplying less. And for that guy, he's also multiplying, but also not so aggressive with multiplier 1.5. But let me go for the chart. And by the way, you can easily go there and check. So you are clicking in your MetaTrader section signals, going for this kind of signal that you want to chart, and let's say visualize on the chart, and you'll see exactly like I was showing you at the picture. You will see exactly here how they are trading. Let me remove this grid to make it more clear for you and to show you reality of this trading. You see, he was buying for a long time. How many times he's buying? 1 2 3 4 5 6 7 8 9 to close this position here in plus. Also here, you see how many times he was trying to sell, until this position started falling down. He started from 003, I think he was, and the last his position was this 033. So this kind of system, it's too much sensitive from the market, because imagine what will be, when I ask you this question mark, what will be if the price will go more higher, and not even more, but way more higher. Check how it was there, it was really huge. Let me go and check another signal. Let's say we want to check calm investor. This is the same that I was showing you. Okay, let us see exactly the way how he was trading. What kind of instruments he was trading. He was trading Australian Canadian. Let us open Australian Canadian to understand exactly what he was doing there. Australian Canadian, exactly the same. You see, this is exactly the same strategy and exactly the same exactly the same style of trading what I was showing you. Check here, for a long time here he was trying to sell. Check, and only market was giving him chance to close this position in minus. But what will be, let's say here, if the market will continue to go up, and it will be something like that. This signal, he was working for a long time, and he was also in the top. From 2018 he was working in plus, and right now he's in minus $43,000, almost everything, because his balance is 49, so maximum drawdown 88%. The problem of these strategies, if we will open one more time our terminal, we can see exactly. So what kind of minus was there? It was huge, correct? But they are targeting just small plus. What is the point? Explain me please. What is the point to trade for whole months to targeting just profit half of the person, when in the end you are in risk of 88%? So there is no logic behind of this trading. You are targeting small profit, but in the same time your risk is huge. Or it might happen like that. Check, balance right now is just $17. This guy was trading in plus from 2021, and his balance was how much? It was 318,000. So from the balance $318,000, And by the way, this is account of FBS real, so this is the real account because this is the big broker company. Right now his balance just $17. This is the question that you should ask yourself, because the main rules when we come into financial markets: number one, do everything to make your capital in safe, and number two, multiply your capital. And this is not the way how we want to work with our capital from 3,800 to make $17. So guys, stay tuned with the trading clubs, because there I'm showing you how to make money and how to put your capital in the safe place, in the safe position. Thank you for watching this video, and see you in our next one.